Well, hello everybody. After a few days off, I'm coming back to do some coverage, and I want to jump into a company that is very stable and many of you know about, and that is Apple, ticker symbol AAPL. Now, this is a company that I really like because of what they do and how long they've been around. It's a very stable company. They've been around since 1976. And as of 2021, they are the fourth largest PC vendor by unit sales and fourth largest smartphone manufacturer. So they're doing everything from consumer electronics, computer software, and online services. They're also the largest information technology company by revenue, totaling $274.5 billion in 2020. And since January of this year, they are the world's most valuable company. This goes on to discuss the history of where they've been and where they are today. And I don't want to go through all those details, but I just want to point out that it's a company that's here in the United States, based out of Cupertino, California, and one that is going to be here for the long term. Another aspect of this company that I really enjoy is that they put the investors first. And what I mean by that is the dividend payout. I'm going to go through this and start from the bottom. You can see that as far back as when they first were founded in the late 80s, that they've been paying out dividends ever since then. And you can see this long history that shows that it's great, it's stable, they really want to share their wealth. And that's a big reason why I'm invested, and I'm continuing to looking for opportunities for those entry points to buy in and build my holdings with more shares. As I get to the top of this, you can see that currently they're paying out at 0.5% dividend yield. The last ex-dividend date was November 5th, 2021, and that's at 22 cents per share per quarter, or 88 cents per share per year. How many times has Apple had a stock split? You can see here just on a quick Google search. They've had since 1987, one in 2000, 2005 for a 2-for-1 on both those dates, 2014 a 7-for-1, and the most recent 4-for-1 in August of 2020. And so when I started seeing here recently that they were having that stock split, that was a time for me to buy in. And so I was able to capitalize on that split. And I think that this is a great way to attract more investors, because when a share price is $500 per share, it becomes very expensive for the everyday retail investor to really jump in. But when it drops down to the $150 to less than $200 range, that's much more appealing and attractive for investors. And it really helps the company to be able to boost the overall number of shares that investors out there are buying, which increases the cash they have access to. So I do see them in the future doing a stock split. At what point will that be? Yet to be seen. But it just shows that this is a very strong company. They're very stable, and they're doing the right thing with the people who are staying with them long term. Another reason that I really enjoy this company, as I touched on at the beginning, they are the world's most valuable company, and they're inching closer to that 3 trillion market cap. In this article from December 8th, they're within striking distance of a 3 trillion market capitalization, a milestone that would make it as big as the world's 5th largest economy after Germany, just over a year after breaching the 2 trillion mark. Absolutely incredible when you see those statistics, and this goes to show you that this is a company that's going to continue to have a very good growth path. And as of the writing of this article, the shares of Apple were up 1.6% at $174, and they need to trade at $182.85 to hit the mark and cap a strong rally that has been powered by investors betting on its brand and viewing it as a comparative safe haven. And that is another reason for me, because it is so stable, that I think that it's a great safe asset or place to invest your money and be able to ride it out over the long term. The stock has jumped about 30% this year on top of an 80% surge in 2020. In comparison, the S&P 500 has risen 25% for the period. So you can see that even with the down year in 2021 and every company, as well as the economy being impacted by the lockdown, that they still have been able to outperform the S&P 500. Its peers in the trillion-dollar club, Microsoft, Amazon, Alphabet, and Tesla, have all gained between 10% and 70%. According to Susanna Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdowne, Apple's does seem to be more immune to the ebb and flow of economic forces just because of this really strong brand. Its new product pipeline is pretty strong too. I know there has been some recent news here about work conditions and employees having walkouts, but I think that that is an immediate issue that will be dealt with. And I think that in the short term, it may be a catalyst to cause a downturn in the share price, but overall won't be much of an impact. But the bigger aspect to look at is where are they headed? Where are they going to be in the near and long-term future? And are they going to continue to be one of the big names, which I think they will? And there has been a lot more talk about possible Apple VR glasses coming out in 2022, as well as them getting involved with autonomous driving or vehicles. And so I think there are some aspects of things happening that they will continue to drive that technology and advancement of where the industries are headed. And that's the real reason that I'm going to continue to stay. It's a strong company with a strong name. They've been around forever. I see it as a safe investment over time, especially for long-term investors. And so, as I always say, make sure that you are doing your own research, reading through and really understanding the vision of a company before you jump in or add to positions. But this is one that I would really look into. And I think it's going to be one of those companies that's going to have a lot of investors jump in 2022 and beyond. To finish this out, just wanted to touch on the 1-year chart. So up 28.96%. And if you go all the way back to 5 years, and like I mentioned, August of 2020 is when they had their split. So they were at the $115, $120 mark. So they're up $40 or $50 per share since then, if you take into account that split. And like I said, I think that in the future there will be another split, and I'm going to be around for that. I don't have any thoughts at this time about selling any of the holdings that I do have. I'm just going to continue to hold what I've had for the last 12 plus years. And like I said, just continue to look for those opportunities where they dip and have those short-term corrections where I can buy it at a cheaper price and get more for my money that will maximize my gains for the future. So appreciate everybody's time. I hope everybody had a good holiday and Christmas. Please make sure to smash that like button and subscribe. You're going to want to follow me on this journey into next year. I'm building out my financial education community and really wanting to help those out there on your path to financial freedom. As always, don't just survive, thrive!